growth. Bloomberg made his fortune from selling data on Wall Street. Now he's proposing a tax on every trade on stocks, bonds, and derivatives. Bloomberg proposing a 0.1% tax on every financial trade. So if you bought 2 shares of Amazon stock today, you would pay $4,200 for the stock and a tax of $4.20. Now, that's similar to a tax proposed by Alexandria Ocasio-Cortez in the House. Elizabeth Warren, Pete Buttigieg, and Bernie Sanders have also proposed similar taxes, but Bernie's tax rate would be 5 times higher than Michael Bloomberg's. Now, according to the Congressional Budget Office, a tax like Bloomberg's would raise about $770 billion in revenue over 10 years. So that's only about a 2% increase in federal revenue, and that compares to the $5 trillion that Bloomberg's overall tax plan would seek to raise over that 10 years. Now, the bulk of this tax would be paid by the wealthy. The Tax Policy Center saying 2/3 would be paid by the top 10% of earners. The U.S. Chamber of Commerce saying, quote, this is a regressive tax on Main Street retirement and savings. Guys, back to you.
Robert, we discussed this a little bit earlier. I mean, the financial transactions tax, it grabs a kind of headline, particularly for someone, as you say, who's so closely linked to the Wall Street and trading environment. But it's not groundbreaking. I don't think it hits banks that hard. And in fact, already exists in other places like the UK. In fact, the rate that Bernie Sanders proposes is 0.5%.
Yeah, there are dozens of countries that had it. In fact, the U.S. had it for a short time until it was repealed by Kennedy in the 1960s. And while it sounds like it would be a huge number because there are trillions of dollars worth of financial assets that are traded every day, the rate is so small and the actual payment is so small that, you know, $770 billion over 10 years sounds like a lot, but relative to the federal budget and even Bloomberg's broader tax plan, it's not that big a deal.
But on the flip side, Robert, I mean, isn't it bad for people who have 401ks and 529 college plans and average consumers? I mean, I know they want to try to get at inequality and hit the high earners, but other people end up paying as well.
So the CBO looked at the impact on the middle class sort of retirement saver, and the average tax increase per year would be between $13 and $15 a year. So, yes, there would be some impact on everyday retirement savers, but it's just not that big a number.